Well, hello, everybody. My name is Steve Boms. I'm the Executive Director of the Financial Data and Technology Association of North America. We're a consortium of fintech firms and aggregators advocating for open finance across the North American continent. And we are a chapter of FDATA Global, which is doing the same across every continent on the planet, except for Antarctica, but one day we'll get there. And I am delighted to be hosting a panel today with three very distinguished panelists about the transformation from digital banking to open finance. And I could spend the entire session giving their bios, but I'll give a very, very quick overview of who we'll be hearing from today. Starting with Elena Litani, who is the Vice President of Engineering at KOHO Financial, Canada's first challenger. Dan Dickinson is the Senior Vice President and Chief Information Officer at Equitable Bank in Toronto, which is Canada's 9th largest independent bank. And last, but certainly not least, Ben White, who is the Canada Policy Lead for Plaid, the global financial data aggregation firm. First of all, thanks very much, everybody, for joining us for what is a very, I think, important and timely conversation, given what we've seen happen over the last few months. But Dan, maybe we'll start with you, if you don't mind. The topic of this panel is the transition from digital banking to open finance. So I guess think of digital banking as the status quo today in Canada. What's open finance and how is it different from digital banking?
Using the old Henry Ford analogy, I think digital banking is the faster horse. I think that digital, open finance gets us toward something more like the automobile, a real actual change to what we're seeing and not just the automation or digitization of something we know. So I think about it as just giving access to finances and not just transactions where customers want them. So they're not forced through the bank's portal. It creates this notion of the consumer having this data right. It's language that Australia has used in their efforts, but this idea that the customer owns that data and can access it how and when they want. So obviously, there will be implications for that for not just banks in terms of systems, products, partnerships, policy, but definitely fintechs as well. Obviously, because they would be now a partner in this ecosystem, and regulators, and lots of different involved parties, but some big impacts on banks right out of the gate.
So that sounds fairly straightforward, as we'll talk about throughout the rest of the session. There's quite a bit of detail that goes into getting from here to there. But I guess the main question, Elena, maybe I'll ask you to opine on this, is why is it important? I mean, I think you'll hear from some cynics or from some skeptics who will say there's quite a bit of work there to get from where we are today to what Dan just articulated. It's a massive undertaking, so why bother? So I guess the question, Elena, is what are the benefits to customers, to end users of an open finance regime versus a digital banking regime?
Yeah, well, I think being a late mover in open finance like Canada is today has its advantages. We can see new business models, services emerging from fintechs around the world. Definitely, we can see that competitiveness does result in better services. It, I think, helps to make finance more inclusive, helps to, fintechs to augment banking services and provide more innovative solutions or close the gaps where banks not necessarily often, had influence or had services. I think to be more specific, what I've seen around the world so far and what I'm seeing in Canada as well, starting to emerge with lack of open banking. It's account aggregators, it's purchase financing at checkout, like in Australia model. Pay by bank, that's definitely something which is really cool in UK. Identity checks and verification, financial product comparisons, greater personalization of what suits your profile as a consumer. There's definitely more interesting scenarios like do you see some innovation happening in travel insurance as well as pension funds. But I also think it's not only consumers, it's also small businesses and businesses in general that benefit. Like, for example, direct credit could have a direct implication to payroll So you can pay not only bi-weekly or monthly, you can pay daily, you can pay by hour. And definitely businesses have been struggling with efficiency and transparency into data, how to synchronize and reconcile different payments and money flows through different bank accounts. So I think open banking definitely opens this as an opportunity.
So we've alluded throughout, and Elena, I think you put it very well just now, Canada as a late mover, or I guess another way of thinking about it as a fast follower in the open finance movement. Ben, I mentioned at the outset, Plaid has been engaged in similar kinds of conversations and transformations in several other jurisdictions globally. Dan mentioned Australia, obviously the UK's open banking regime, Europe and PSD2. So given what Plaid and you have seen throughout the global ecosystem, with other countries, other jurisdictions facing similar issues and overcoming them, would really love some thoughts on, based on that experience, how does Canada get from where we are today to this open finance end state?
Yeah, well, I think Elena did a really great job carving out really the broad potential of open finance. But underneath that, of course, is a lot of complexity, not only in terms of what can be achieved with technology and sort of a market infrastructure, but also what's increasingly been important across the world is the regulatory infrastructure as well. I'm sure we're all familiar with Canada's recent consultations on consumer-directed finance, which I think provides some really great context to be having this conversation, because the opportunity that exists for Canada is truly unique in terms of the timing, right? You can frame it as a late mover. You can also take a little bit more of an optimistic spin and say, it's a great time to learn from these other jurisdictions and how they've rolled out. And I really do have to plug my Plaid colleagues over in Europe and the UK, who just a couple of weeks ago published sort of a roadmap to open finance that, while being largely specific to the UK audience and was written in collaboration with 11FS, which is a UK-based digital consultancy, also provides a really helpful roadmap, again, for how to get from point A to point B being this ecosystem that I think we all want to see that can truly benefit consumers of control of consumer data and open finance. So just to run through what we've seen in the jurisdictions in which we operate, and Plaid launched in the US 7 years ago and now also operates in Canada, the UK, France, Spain, Ireland, and the Netherlands. But we also have our eyes across the world. Dan mentioned Australia. So starting in the US, we see a really market-driven infrastructure that in many cases can be called open finance. There isn't full consumer control of data. What we do have is a consumer data right over banking information that came to be about 10 years ago after the financial crisis in the Dodd-Frank reforms. But it's a little challenging to compare Canada to the US, although they share quite a bit of market territory. There's also the issue just of the US being a largely fragmented financial services ecosystem versus Canada's being quite a bit more concentrated. So where I think it's really useful for Canada to instead focus is on the UK and Australia. The UK, of course, known for being really the first formal regulatory-driven open banking scheme, has provided, I think, some key learnings for Canada to take into account. On the one hand, they launched with a pretty narrow scope of account availability, being just payment accounts, which we've seen has really limited the number of use cases that third parties and even financial institutions can solve for using consumer financial data. In fact, Plaid did some research internally over the last couple of weeks and found that the vast majority of use cases powered by consumer permission data that runs through Plaid are not only reliant on transaction level data. They do require additional data fields in order to power that use case. The second issue that we see in the UK is frame it in such a way that would incentivize all of the players to properly comply in a timely manner. I think it's really important for all jurisdictions to think about how can we truly incentivize all the parties at stake, especially the financial institutions who are the holders of a lot of this data, to view this not just as a compliance exercise, but that is something that can provide them with value. And the last thing that I'll say in terms of Australia, in many cases, we sort of point to as the shining light of a lot of these issues, given that their consumer data right, which launched 5 days ago on July 1st, is really the most expansive and covers the most data fields. I think regardless of what the formal structure looks like, it is absolutely essential and a necessary precondition to an open finance ecosystem being, the most beneficial to consumers, that it starts with a strong consumer data right, meaning consumers have a legal right and the data holders have a legal obligation to provide them with access to that data.
Steve, can I just jump in there for a second? Because I think Ben touched on something really interesting there, talking about the UK and that as a market that we could look at. I think one of the interesting things we've seen come out of there, in addition to all the great examples that Elena gave, you're starting to see some social good use cases come out of this, which frankly probably wasn't the first thought process, I think, from the banking industry, but maybe should have been. But I think we saw some really good examples of that coming out. So this is like a classic utility where when you start to build these things, you don't necessarily know all the use cases that are going to come from that. And you won't get people on the street excited about the utility. If you ask people on the street whether they care about alternating current, they all say no. But if you tell them that they want to keep their food cold and plug their phone in, then yes, they do. So I think, getting those use cases out and showing some of these things is where it becomes really, really interesting. No one's going to get excited about open banking or open finance as a concept, but I think we'll start to see now in Australia too. As you said 5 days ago, we're early in, but we'll really start to see the really great examples start to flow, and we know that some people are ready for that.
Yeah, I would like to jump in as well. I think we're also interesting to see what not to do. Like with PSD2, on one hand, it's like had a great incentive to protect consumer rights, but I think the issue came out that it didn't mandate enough of what and how to achieve it. So what ended up happening, every bank or every financial institution created their own APIs, their own way how to access this data, how make it available, making it a nightmare to connect to and actually make it work. So in opposite, if we look at the UK, where they did create some APIs, and it seems like, well, there's potentially some gaps, but still it's working in much better and more structured way.
That is a fantastic segue, Elena, into, I think, one of the fundamental questions I was hoping to ask everybody about. Dan, maybe I'll ask you to start, but I would love for the group to just share their thoughts kind of individually. So Ben and Elena and Dan, you've laid out basically juxtaposed ways of trying to deliver the end state that we're talking about here, which is open finance. Elena, in particular, you talked about kind of prescriptive versus laissez-faire. And there's been some conversation in the market in Canada after the Department of Finance's Phase 1 report came out at the end of last year, beginning of this year, on what is the appropriate role of government, or said another way, if government would just say, we want to get to open finance, that the market could itself deliver the road that would take us there, building one API that everybody adopts, for example. So Dan, starting with you, is that the case? Do you think that this is something the market itself can deliver?
So at Equitable, we're a pretty strong believer that there has to be a really strong regulatory center to this, for two reasons. First, if we do think about it as a consumer data right, and that data could span, it could be finance, it could be health, it could be utility, it could be any number of things. One, I don't think any industry should be trying to set standards that actually affect others. And it's not just the actual data itself, but it's even consent models and liability and things like that. So I think you do need a strong regulatory center helping to set those for different industries. And second, I think you don't really maximize benefit unless you have that strong regulatory center push. Like any other utility, as I mentioned. So I think it benefits from standards. So whether that's the APIs themselves, the consent model that I mentioned, making sure that it aligns to privacy law, it benefits from ubiquity. So, having timelines that make sure that all players have this data available and there's not some industries left behind or even some groupings of people left behind. I think having, this ubiquity across industries works. And then having benefit from, this equitable access for all citizens, right? So regardless of where they live or how much money they have or what kind of financial institution they use or other industries. So I think having a strong regulatory center means that you have a better chance of success across those three lines. So we've been very firm believers in this, that there has to be this isn't going to be something that works well for anyone other than the industry if it's driven by the industry.
And Steve, if I can jump in there, I think, Dan, the
Please
point you make is so strong because of the earlier point that you made around how this resonates for consumers and how it doesn't, right? I think the issue with open banking, and we've already seen this a little bit just around the definitional change that we saw from Finance Canada, where they're calling it consumer-directed finance, is that there's quite a bit of downside risk when you introduce to consumers the notion of your banking data being accessible. For consumers, this is their highest priority is to protect, this is the financial livelihoods. And the issues that you bring up in particular that we need regulatory intervention around are the ones that provide really the necessary preconditions for consumers to be comfortable. If you don't have a liability framework in place, if you don't have the proper recourse mechanisms, the consumers will inevitably see this as something that could be harmful and might not necessarily be worth exploring. So I think it's really about implementing those at the same time with the ultimate outcome, as Dan mentioned earlier, of delivering real value. And that's how you drive adoption.
Ben, if I could just very quickly press you on one perspective that I think you uniquely would have, and Elena, I promise we'll get your perspective on this as well. The US heretofore has taken more of a market-led approach than a regulatory-led approach, but that's come with quite a few significant challenges for end users to get access to their data. Is that right?
It is. I think, as I mentioned earlier, in many cases, the U.S. can be described as having a fairly fully functioning open finance ecosystem, but as a result of the fragmentation in the banking ecosystem and really the different approaches that financial institutions take to how they conceive of consumer financial data, it has led to this issue of sort of really disparate experiences for consumers. I think if you Google Plaid, if you look up Plaid on Twitter, you'll see quite a few examples of some of the challenges that individuals have in terms of connecting their bank accounts. That's why Plaid and other aggregators in the ecosystem dedicate a lot of resources to building strong relationships with financial institutions. I think that's going to be a key factor in all open banking, open finance ecosystems. But as you mentioned, Steve, it is one that has resulted largely in reliance entirely on bilateral contract negotiations, which, as much as we would like to think, ultimately prioritize end consumers, in many cases can come down to sort of what are the priorities of the various institutions that are at play.
Elena, I'm sorry, I took your spotlight away. Please, your thoughts on market versus regulatory led.
No, I wouldn't, I agree completely with what Ben and Dan said. It's definitely resonates highly with us at KOHO. I think we feel that we are fighting daily for people to get access to their money and allow them fiscally responsible spending. So we try to promote financial health, financial inclusion, and yet the experiences our consumer face are not ideal. And we basically restricted a lot by our ability to have access and to connect to systems on most basic functions like verification of identity, like accessing account information, and ability to move with customer consent their files. Everything we do is trying to invent the ways which are not that secure, frankly speaking, and because consumers basically provide their account information and password. And I wish there was a better way. And yet, because of the success we're seeing with SAC, with KOHO, with other new banks or challenger banks, we know that Canadian consumers need it. There is a need there. They want an alternative solution.
And there's another component to this too, Elena. Maybe I'll ask you to start on this, and then certainly Ben or Dan to add to it, which is we have the benefit in this conversation of talking about open finance in a vacuum, of saying this is the road we want to get to. But of course, in practice, there are any number of other considerations, particularly from the regulatory and political side, and existing law that need to be considered, and the interplay between that existing statute, law, regulation, and how to get from here to there. And so in the interest of being open and having full disclosure about the road from where we are today to where we want to get. What are some of those considerations that would maybe make this transition more complicated or more difficult?
Yeah, I think today, like what Canada is trying to achieve, it's quite complex and has a lot of dependencies. And I think the challenge is it's probably because other jurisdictions potentially have done it a bit more gradually. Like if you look at the UK or Australia, you know, in some cases they first launched the fast payment system, then they considered the consumer rights, then they started talking about open banking. In Canada, again, maybe it's because some of the delays, potentially some regulatory regime, everything seemed to be slightly delayed, and the result is that we are trying to pursue multiple initiatives which have dependency on, and enablers for this open banking and open finance ecosystem. Specifically, we're pursuing modernization. As part of modernizations, we're revisiting building better systems, but we also looking who has access to those systems, and with that comes a legislative change. Bank of Canada considers what are the settlement models we need to use, especially for RTRs, and that also has some research and implications to all of that access and who can access the Canadian systems. Also, Department of Finance released a new retail framework, oversight framework. Sorry, let me start again. Department of Finance released a new retail oversight payment framework, and that one is supposed to define how different entities will be regulated. But again, it's still in process and it's not yet been firmly decided on. To add on top of it, we do have some other dependencies on PPDA. And frankly speaking, digital ID is on one hand is an amazing enabler, but I mean, it's such a difficult problem to solve. So I feel like we're trying to do sometimes too much. And I think that we probably need to focus on something smaller and achievable to be able to start moving in the right direction.
And I might just jump in because, I recognize a lot of those moving pieces do seem interdependent, but it strikes me that I've been participating recently in some working groups as part of the Standards Council of Canada's efforts to sort of standardize data processes and treatments more broadly across both the public and private sectors. And I've heard quite a bit in those conversations. There's sort of an all eyes on open banking mindset where if we can get this right, then we can get other pieces right. I'm curious to hear, from my co-panelists, is that sort of the proper way that we should be framing open finance? I'll put my 2 cents, which are, I do believe that if we can establish a strong consumer data right, then that will provide the sort of foundation upon which many of these other implementations can benefit consumers. I'm curious to hear whether you all agree or disagree, or how do we think about those contingencies?
Yeah, I mean, for my part, I don't know where, I'd love to have magically all three things, digital identity, payments modernization, and open banking or open finance all at the same time. Failing that, I don't disagree. I think there might be getting that concept right, getting that agreement on principle that there's a consumer data right, if that is the discussion, I think can set you up to handle the others better. And I really did see those three things intermingled in our response to the Department of Finance. There's a Venn diagram of overlap, and all these things, hanging together are sort of the future of almost digital finance and infrastructure almost in Canada. But some sort of forward momentum. I mean, the problem is that everything is either slower than it should be or stalled. And these things are complicated. Elena alluded to how complicated digital identity is. I mean, you're trying to get 20 provincial agencies, all the banks, all the telcos, and all the credit bureaus to align on something, which is not easy. And so bodies like DIAC are trying to do that, but it's a tough one. So in a perfect world, those things would be in place. PPDA would be refreshed. The retail payments oversight framework would be done and very clear, but it's not. and we're not in that perfect world. So I think, maybe settling on principles, Ben, as you said, as a starting point, if we could get to this alignment of consumer data right, but that is notably language that hasn't really been used yet in this jurisdiction. So I agree that would be a good starting place. My worry is that we'll end up with more fragmented.
So I've got one more kind of meaty question, and then we'll do a quick lightning round to end it. The meaty question is this. There's been a lot of conversation in this discussion so far around the consumer benefit. And in fact, even the name consumer-directed finance rightly puts the end user at the center of the ecosystem, where one might argue, I certainly would argue, they're not today. But again, if we think about the fact that Canada is a fast follower, we have the benefit of seeing what's played out in other markets, where certainly there's a consumer benefit and a customer benefit, but they are not the only stakeholders in the system that benefit. And in fact, we can start to both quantifiably and anecdotally measure some of that benefit. So Ben, again, I wonder if we could put on your kind of global perspective hat for a second. If you wouldn't mind sharing some perspective around what are the other benefits beyond just for consumers in these kinds of ecosystems.
Sure. Well, I think I mentioned earlier when we were talking about learnings from other jurisdictions, just how important it is to set up this system in a way that incentivizes market activity to the benefit of all the stakeholders. So I think the best place to start is really just by identifying the uniqueness of a digital financial ecosystem, in that there are really 4 key parties that all need to be optimized for at the same time. So you have, of course, the incumbent financial institutions. I guess you can call that, also include some of the new entrants in that same, I don't want to restrict it just to incumbents. So financial institutions, you have end users, you have third parties, fintech companies, et cetera, and then you have aggregators as well. And it really does require that Openfinance, to be successful, as I mentioned, has to balance all of those incentives and provide real economic value across the board. But we have seen that play out in certain jurisdictions. I can think of the US in particular. In our COVID stimulus, part of the government's initiative to provide funds to small businesses required that financial institutions as lenders were able to intake small business payroll data in order to properly assess the value of the loan that they could make to that small business. And that was information that was not ready at hand. Many small businesses might not even have existing bank relationships with the lenders with which they were applying for these loans. So Plaid actually recognized that gap in data connectivity between payroll providers and financial institutions and built several integrations across those two to allow small businesses to permission their data from the payroll provider to a financial institution, which in our minds really proved the value of an open finance ecosystem where a consumer has the capacity and the right to permission their data as adding value back to financial institutions. I just think it's really important, almost from a narrative perspective, that we reframe part of the conversation from, the future of financial services is going to be some grand battle between the incumbents and the new entrants, to this is just the development of an ecosystem. Inevitably there will be winners and losers, but the winners and losers are not going to be determined by who entered first and who entered last. It's going to be determined by who can address consumer pain points in the most efficient and effective way possible using the new resources at their disposal, those resources being consumer permission data.
So as we come to the end of this session, I'm mindful that we have, hopefully, many fintech and other market and policy stakeholders who are watching us and benefiting from hearing your perspectives. I'd like to end the session with one, I think, very important question, but hopefully just maybe a 2 or 3 sentence answer from each of you, which is, as we find ourselves here in July, during a year, obviously, where a lot has changed, but we had hoped that phase 2 of the open finance consultations would be well at hand, and we would be very clearly navigating our way towards resolution and implementation of an open finance regime in the near-term future. Obviously, that's not where we are now for a number of reasons, but understandable reasons. Elena, maybe I'll start with you if I could on this question. For particularly the fintech folks who are watching this conversation, what would your advice be? What can they do?
Well, I think recently, I think just last week, the Standing Senate Committee has published their thoughts on open banking and open finance with some very direct recommendations and steps going forward, short term and longer term. I would suggest reviewing it and providing feedback. And if it's you don't know how, just reach out to your MP, and provide that feedback and information. So I think it's really important that there's a lot of thought leadership in this space already, and there is a lot of parties who are interested in doing what's right for Canada. I think we just need to unify our voices and speak up.
Dan, what do you think?
You know, actually, so I saw that same post, Elena. I think the Senate Standing Committee report actually came out about a year ago, and I think the post that came out a few days ago was Senator Dickinson expressing his frustration that not much has happened. You know, and listen, we all understand it's a completely abnormal year. We understand that COVID has thrown timelines to the wind for a lot of things, and certainly the government's focus is where it's needed to be, which is to make sure that the right funds are getting into Canadians' hands. It doesn't lessen the frustration, I think, that everyone feels who's been involved in this work, in that this would have been the perfect time to have an open finance kind of regime in place, to have digital identity working better than it does today, to have real-time rail actually pushing payments out the door versus how we were doing it. So while you see everyone come together just by sheer horsepower and effort, I think this highlighted really the need for these kind of advancements in our ecosystem. So yeah, I think the thing that everyone could do is become more educated about this, and really the key thing that I keep saying over and over again is you have to keep the consumer in the middle of this. They have to be the absolute core and focus of this, regardless of what kind of player you are. If you're a fintech, think about how to solve problems for them. If you're a regulator, think about how to solve problems for them. If you're a bank, think about how to solve problems for them. We have to keep the average Canadian citizen or small business owner just at the center of this. Otherwise, it's not going to have the desired effect.
And Ben, what do you think?
Yeah, well, I think building off of both of those really strong points, having only in the last year or so been exposed to this market, one thing I've been really impressed by is the level of investment that Canadian accelerators and incubators put into early stage companies. And I think it's an important time for those companies to recognize their voice, not just as the voice of consumers, but really their own voice as bringing Canadian innovation to the forefront. I think we talk a lot about how consumers stand to benefit from these products and services. I think Canadians also stand to benefit just from greater innovation and economic growth that can come from this. So the more we can lean into the existing structures, whether it's the hosts of an event like this or many of the sponsors here, and continue to lift those voices up and make really the broad case for all the good open finance can do in this ecosystem, I think it's an increasingly important time to make those voices heard.
So there's a very optimistic way to end what has been a really informative and substantive session. Elena, Dan, Ben, thank you very much for your time. And here's hoping that next year, when we reconvene this panel, first, we'll be able to do it in person. And second, we'll be doing it under a different environment where we have the beginnings of an open finance implementation in Canada. And we're talking about the nitty-gritty of how to build it better and improve it and continually evolve it as time goes on. So thanks very much for sharing your expertise with us. I'm looking forward to seeing y'all soon.